I have the pleasure to declare an interest to be paid the members for financial year 2021-2022.
That was the countdown as the General Duties Minister delivered the much-anticipated news. A low interest to workers as the Provident Fund announces 9.6% from highs of 12.5%. News received with mixed feelings given the current inflationary pressures, but workers' representatives seemed happy with this share of the cake.
We were expecting actual lower interest because of the problem, because we also squeezed you. I remember we really squeezed you to get our mid-term access, but you have performed. I also want to thank our Director of Labour for the support you have given to the workers.
Fund managers defended this low payout and insist it's a reflection of economic shocks on the global and regional markets where the NSSF has sizable investments.
We would have earned an extra 0.96%. If the market had not crashed, I know the word crashed is a bit of an exaggeration. If the market had not lost its value in Kenya and we had not lost any money on the stock exchange in fair value valuations, that would have been another 1.5%. So if you put those two, 0.69% and 1.75%, today we would have declared 12.09%, and that would have been comparable to what we declared last year. So for the analysts, midterm cost us almost 0.69%. The market cost us 1.75%, and therefore we ended up declaring 9.65%.
Hundreds of billions were paid out in midterm access recently, and the managing director explains the implication on interest payment to members who withdrew their money.
You will get interest on the portion that you did not withdraw. Right. So if you had 100 million shillings and you withdrew 20 million shillings, because that was 20%, you will get interest on the 80%.
On the 80%.
Yes.
That was
but you won't get on the 20%.
Fund officials say last year they paid out 80% of the total collections as benefits, adding for the first time growth of assets is being driven by income rather than contributions.